Hello and welcome to the Stock Planner channel. Today I'd like to talk about Humana, a healthcare stock. I'd like to short it and I'll tell you why. But before we get started, I want to tell you that the Stock Planner channel is a education channel. We like to share our ideas, educate ourselves, learn how to do it, and win. Once you learn how to do it, you can be a winner for life. But I'm only sharing my ideas. You're responsible for your own trades. Let's get started. Humana. Looking at FinViz, yesterday we had a large red candle. That gave me an indication that this stock might be going down. This morning we have a green candle starting out. I still think this stock has reached its all-time high, and it has. It looks like it's reached this level twice before and came back down again. I believe it'll come back down to the 50% level, probably fill this gap right here, fill the gap. But it's coming down. And this is a technical, by the way, I'm looking at this technically, not necessarily fundamentally. This is, fundamentally, Humana is a great stock. Healthcare is going to be very, very active and popular for this decade. It has a buy recommendation. It's optional and shortable. It is profitable company. The PE is positive. And it trades in a large volume. Target price is $4.86 and currently trading at $4.65. So it has a positive target, and there's room to grow. If you think it's still, stock is still going to go up. But sure looks like, yeah, double top. Looks like to me like it's going to come down. So I'm going to go short here with the hopes that it comes down into the 430s, 440s. Now this is TradingView. Looking at Humana on the daily time frame. Each one of these bars represents a day. This is a zigzag indicator. It's not an indicator. I mean, it's all it does is painting the tops and bottoms, and it's a perfect indicator because it looks to the future to paint these. In other words, it repaints itself to be perfect. Right now, this zigzag is perfect. It knows what it's doing, but the last two bars, it didn't know what it's doing, and that's because it's thinking it might go down. If it was going up, this zigzag would know what it's doing. We have earnings coming up soon. That's a lot of people don't like to trade around earnings, but the trade I'm going to make is 2 to 3 months out. The MACD is pointing down. The stochastics was above in its overbought condition, but came back down below this 80, so that's a downward point. The RSI really zoomed up. It came back around the 30. So our indicators are showing down. That's what makes me think this, this is technical play. And I like when all three of them occur at the same time. I like that. And I like when the zigzag doesn't know what it's doing. So all those conditions are perfect except for the earnings. I wish it didn't have the earnings. But I'm going to go 2 or 3 months out. So let me show you what I'm thinking. This is a free tool. It's a simulation tool. And what you can do is you can go ahead and build different strategies. I'm looking at the intermediate level. And a lot of people on Robinhood use this, buy and short, long call and puts, and cover call. The next level up, if you're a novice trader, the next level up is to look at some of these credit spreads or debit spreads. In other words, debit spread you pay, credit you get money. So I'm going to do a bull put spread. Excuse me, I'm going short. So that's going to be a bear call spread. Bear call. It's short. Boeing, the last one I looked at. And I actually looked at it for long, by the way. Humana is trading at 462, and there's 460, and the width of the spread is $25 times 100. That makes the estimated margin of $2,500. If you didn't want to spend that much, you move this in. Let's say it's going to be around $500. By the way, I just took this trade at $2,500 spread, so I took a little more risk, but essentially the same play. And this estimated margin is 500. I want to go out to January. 500, January. Now I want to set my chart range to 8%, because that's where I backtest a lot of, at a 8% target for my backtest for these stocks. And here's my playing field. And for 500 investment, I'm getting 300. That's like this. I like this a lot. Let's take this look a little deeper. So at 8%, if the price gets to 425 at any time during these next 3 months, 90 days, see it there in 86 days, I can take profit all along the way. And that's what I do. When it pegs to the 8% level, I'll take profit anytime it does that and get out, do something else. That's why I like swing trading. That's why I like to do options. And $135 on a $500 investment is greater than 20%. That's good, even if it takes 3 months. Now, a lot of YouTubers will say, never risk more than you can win. So, let's just say it's 5%. Sometimes I have my alerts set at 3%, but let's just say it's 5%. So anywhere, if it hits the profit target of a stop loss of 486, that's a stop loss, and target 486, I will get out. So if it hits it November 15th, I'll get out with an $83 loss. Or if it hits it, I'll get $150. You see what's happening here? And if it pegs all the way and gets away from me, I lose $122. So that's my risk. And what I usually do is I look at it about every 30 days. Let's say I'll take a look at here and reevaluate this trade. See if I want to stay in or get out. And then I'll do it again. If it's up in this area here, or here, or here, especially here because your time is running out, I'll end that trade. But if it's down in this area here and didn't hit the 8% yet, I'm going to take it and ride it as long as I can and hope for this, the 290, the whole shebang. I think there's more ways to win. It's a much more relaxed trading. I don't have to watch this every single day. I can have a simple Google spreadsheet with these private profit targets and stop losses and look at that and have it update automatically using their spreadsheet function and tell me when the stop loss and target is hit. It's really nice, very easy. So I can just relax. And if you know this, if you know your stop loss and target, you can have another job. You can have a business. You don't need to stand in front of this computer. So this is my playing field. What do you think of this trade? Is this enough money for you? Will this stay below 458? 458. See it there? 458. As long as it stays below 458, I win. Let's take a look at it on the chart one more time and then say goodbye. 458 right there at the bottom of that red candle. So if it stays below this, I'm going to be happy. If it gets down to 425, that's your 8%. If it gets to 486, that's up here somewhere, that's your stop loss, break even. Now it's got a lot of distance here, but you have a lot of opportunities in between it, and it's way down to win. So what do you think of this? Will the gap fill in the next 90 days, or is this stock going up? Please leave comments in the section below. Like and subscribe. Do your own due diligence. Don't take yourself too seriously. Be happy. Relax. If you're not trading right at the moment, learn a new task like option trading or shorting, or follow a new YouTube channel like myself. Anyway, catch you on the flip. Happy trading. Stay tuned. I have a couple more trades today.